It is Thursday, June 8th, and we've got a great show for you today. So let's get started. We've got a little bit of housekeeping to go over here. Today and tomorrow, the show is going to be a little bit different. I'll probably have less articles to go over, and I won't be posting all of the show. I won't break it up as recaps. It'll just be one show that I post. Next week, the show is not going to be live during next week. I've got some prior engagements, so no live show next week, but I will be posting each day a video from a series that we're doing for investing for newbies. It's one of the most requested things that we have is basically some videos on people getting started in investing. So I'm going to post those during next week. I've got to work on those. I'm getting a little bit behind on them. But I'll have them ready for next week to post. So no live show next week, and today and tomorrow may be a more abbreviated show as I get ready for that. So that's kind of the latest that we've got going on with the show and going on with the channel. Really appreciate all the viewers that we get live and the people that are posting the comments to the recaps that we post up each day. Really appreciate it. Next week we're just taking a little break, and we'll be back the following week. But while we do that, I hope you enjoy the videos teaching people how to get into investing. A lot of people have requested it. I hope they do a good job for them and really get people involved. So today we're going to talk about a couple of things. First, we're going to talk about Nintendo, and then we're going to do the series. We're going to close out our apparel stocks that we're looking at, finalize them, and get one of them on our speculative shopping list that we have. So that's what we've got coming up. First, I want to talk about Nintendo stock. Nintendo has had an incredible run. Prior to even before we started the show, it's up almost 50-60% since we started calling it a buy with the show, and it's up about 100% year to date. So the stock has run, had an incredible run, and I wanted to look at the stock to kind of see, is there more room to run? Should we keep being bullish on it, or should we say to people, take some of your profits for a while? So let's look closely at Nintendo and what we think some of the catalysts could be. One of the things today, you can see the markets themselves are mostly sideways, but today there's not a lot of news articles anyways to do because of the Comey testimony that's going on, so that's flooding all the news. Do yourself a favor tonight. Watch about an hour's worth of news from like CNN or Fox. Watch a little bit of each, and as many different news sources as you can. Look at those sources of news and try and sift through and find as many facts as you can. You'll probably be surprised how little facts are there, and you're going to see real polarizing opinions on what's going on with it. And this is kind of going to be a perfect example. I talk a lot about on the show when you're investing your news sources, and you got to be able to really filter through when you're investing in stocks. And this particular when it comes to politics, you can really see the slant one way or another of what you got, and you always want to keep that in mind when you're researching and looking at stocks. One of the first things we go to when we look at it is investor relations, and I always warn people, the investors relations, they're going to put the most positive spin they can put on the stock. So you've got to, when you're looking at your news and information sources, you got to see what slant they're taking and learn how to kind of filter that when you're getting your information that you need from whatever the source is. And politics is always a good example where really the news channels, the publications, the websites, stuff like that, they really kind of show you, they tip their hand as some of their bias. I don't care either way personally, but it's a good way to see it, and certainly with the testimony coming out, it's going to be very easy to see. But Let's focus on Nintendo like we wanted to. Nintendo, as you can see, they've had a great run over the last year. Yeah, they were down in the 20s, and now they're up around 40. I'll load up some of their statistics here. Uh, a, it has been a great stock to own. We like them because of the amount of cash that they have on hand and the dividend that they pay, their intellectual properties, etc. And with the Nintendo Switch, they've really kind of been revitalized, and it showed even prior to that with them launching Pokemon for the iPhone and talking about developing for phones. So, looking at their stock, I got my tools to draw with here. You can see right at 20, and it's launched up. Let's take a look, 5-year cycle. You can see it's even grown, grew, settle, grew, growing up. Again, from 20 to 40, it's doubled. And if you look, this is Wii era heights around here. And we've still got a long ways to run before we start hitting this area here. And a lot of analysts are saying that's where it's going to land at because the Switch is going to be as big as the Wii. Now, post Switch launch, they could have another Wii U after. Maybe not, and they'll go right back down. But let's see what we've got with Nintendo here and what catalysts are out there in the future for this stock. So, checking out their stats, they are getting a little pricey as far as price to earnings go. Trailing is 40 times earnings, but they could have a lot of sales growth. 52-week change is up over 100%. So that is a heck of a run. They still got momentum on their side. They're way above the 50 and 200-day moving average. The thing that we really love about Nintendo is the cash hoard that they have. So if they have some failures, hardware failures, they've got enough cash to stay alive, and they can rely on their software. So if a stock runs 100% and you've got a good chunk of money invested in it, normally the idea is it runs 100%, you take off the table the money you invested in it and you just let the rest grow. You've got that huge gain. It's called playing with the house's money. Now that's what you've made, and let that grow. Own the stock if you like it and let it grow. You could miss up on future growth by taking your money out. So it's always good to have kind of a shopping list of stocks. At this stage, I like to just invest and own them for long term. So let's look at the upside and downside, the prospects of Nintendo. Worst case scenario, catastrophic failure. The Switch stops selling. Their next hardware announcement completely fails. What do they have software-wise to sell and keep the money going? Oh, you got Zelda, you've got Mario, you've got Metroid. Any of those that go on to the PlayStation, Xbox are going to sell huge, so you got a bit of a safety net there. But how long can that last? Can they make new IPs? Well, I would say absolutely. Let's take a look at the ARMS reviews that we've got going on. The Metacritic, will pull that up. Very surprising. Now, Splatoon had some great reviews, great game, a lot of hype behind it. ARMS, people were very skeptical on ARMS, looking at it as it's not going to be that great of a game. They didn't quite understand it. Um, we can turn this trailer off here. But it's got close to an 80 review. A lot of positive reviews. It's gotten positive and mixed reviews, nothing negative yet. And it ranges from, gotta click this off here. Hold on. 100, which I think is way overblown for ARMS. It was pretty good. It wasn't that good. But Nintendo certainly did a good job of putting their Nintendo spin on it, like Splatoon did with third-party shooters. A lot of praise for ARMS. I said that this version of ARMS isn't exactly a must-buy game, but I think ARMS 2 will be with some more polish. There's a lot of depth there. People are saying that they had a lot of fun with it. So really, a franchise with pretty. People are looking at it as this could kind of be a joke title from Nintendo. Not a lot of things, not a lot of big things for it, and I think this is going to sell very well. And I think it's definitely a franchise that they can build off of. With ARMS and Splatoon, I think you're really starting to see the younger developers take off at Nintendo. Trackademics, how's it going? Thanks for watching. I think the newer developers on Zelda, another example of that. So I think the future is bright for their software, and we talk about that safety net if Nintendo was to go down. They've also got their Universal Studios, Mario World. We got the first pictures of some of the concept for that. That's going to be a huge seller for them as they do these amusement parks. That's going to add to their bottom line. I'm just going to pull up some of the snapshots here, take a look at it real quick. Some of the concepts at it, the greeting area. I mean, that's pretty cool with Bowser's Castle and things, and the classic hills. There's kind of the overview, and they're going to have Mario Kart and stuff like that there. So it's pretty cool. Why don't you stream on Twitch to learn invest? I dual stream on YouTube and Switch at and Twitch at the same time. I was going back and forth between YouTube and Twitch, so now I dual stream to both of them. And yeah, definitely Twitch to get more gamers involved. That's the idea, and hopefully I get a couple of them to start getting into investing, make some money. So back to Nintendo here. Stream on Twitch is Epidemic Media. Yeah, I got to do a better better work with that. Let me help. I'll post it's Epidemic Media LLC. It's in the talk show right now. I put the link in the recap videos. You can find the link in the description there. Other item short term with the Switch that we have, they are going to sell different controllers and add-ons absolutely like crazy. They got pro controllers for Splatoon coming out, and different attachment controllers, the small controllers that go on the side of the Switch, different colors. People are going to be getting them. Analysts are now starting to pile in, and they are saying Nintendo could sell closer to 18 million Switches instead of 10 million, which Nintendo is saying. Marty, how's it going? So analysts are still very bullish on Nintendo. I'm still very bullish on Nintendo for the reasons that they got the $1 billion and the software safety net. Yeah, thanks for watching over on Twitch there. And I got just so you know, I have both chats, uh, Trackademics. I got both chat rooms I can pull up. So whether you're watching on Twitch or YouTube, you can see it there. But I live stream on Twitch once in a while. The kids and I will play Mario Kart or some of the games. It's been a while since we've done some live streaming, but look for some of that to come out. But um, so Nintendo Cash Hoard, their software IP safety net. I think the Universal Studios, the theme parks, is going to be a big seller for them. It's uh, I wouldn't be afraid to keep money in Nintendo. Anytime it dips is going to be a buying opportunity personally for me in the future to add more. Max, how's it going? Um, I look at it there. Um, the long term still going to be bullish on Nintendo. It's run up 100%. If you got in way back when it was $20 a share, don't be afraid to take some money off the table, and leave what you've made in there to grow that. Um, I think Amiibos, their toys and everything. I think they've got really good selling opportunities. You'll see the Switch probably get close to the Wii in sales. I would say everyone's predicting it now. Lines are still lining up in Japan to get their hands on the Nintendo Switch, and it's still relatively hard to find to just walk into stores to get it. I think around the holidays it's going to get worse. We when it first came out, we would do some eBay checks to see what it's going for. That's a good way when a system comes out to see what the going rate is on eBay. Will tell you just how sought after the system is. And at first, the Nintendo Switch was quite high. People have kind of lowered their prices now to where they were getting about $100 profit or so. But as the holidays come up, we're going to look at that a lot closer. So that's Nintendo. I think it's still got room to run. We have it in our portfolio. It's probably one of the best performing stocks in our portfolio right now, the kids' portfolio. And I still think it's long term. Any dips, you can buy. Retail sellers is Q3 and Q4 better for them because of the holidays compared to Q1 and Q2. It depends on the retail. I pull it there. Question on the retail side. A lot of the retail stocks are, they consider them like cyclical, where they do have seasons where it's much better. Typically, it is holiday season, but depending on the retailer, they have their specific quarters are the ones that their target where they make pretty much all of their money. Some of them is some of them obviously they make money year round, but certain quarters are really where they get their profits from. Um, Different companies have different quarters too. When you incorporate, you set up what your fiscal calendar is. So not everyone's quarters line up. So it depends. Yeah, there are peaks in holiday seasons. Just because someone says, fourth quarter earnings are coming up, don't assume that's going to have all their holiday sales in it because it's the end of the year and stuff. Um, but yeah, that's retail and different people like that make their monies at different parts of the years can be a little bit tricky. H&R Block is a good example of that, where tax season they make all their money. So really, when you're looking at H&R Block, you see how they do in their off season. If they're doing better than expected in their off season, that means they have a really good shot come tax season to kind of blow it out of the water. And I believe that this past year H&R Block did have their big bump. It was this year or the year before. I had traded some H&R Block, and that was always the way to make some money. I just brought Express our offers. We're gonna get into some retail here in a second, and we'll continue talking about that. I think I got another retailer that's at a discount. I I've been bullish on GameStop as a dirt cheap retailer. I think they're getting beaten down way too much. Uh, a lot of the retail section is just getting hammered. But and Marty, yes, I like your with the attach rates on Nintendo with their games. It is very high. So don't be afraid. Nintendo has some room, and they have a great safety net. They pay an annual dividend depending on how much profit they make. So we really like Nintendo stock. And we'll move on here. We were talking about apparel. We kind of do these off segments for, we like to focus on gaming as an investment, but there's also some basic needs that you can invest in, whether it's food or clothing. And we've been doing over the past week, we've been looking at the apparel stocks, and we narrowed it down to 3 stocks that we were looking at. First one we narrowed it down to was Nike. And let me pull up Nike's statistics here. Nike's a solid brand, solid company. Pull this up here. Up a little bit today. They pay a dividend, not a huge dividend. 20 times forward earnings. Another way to look at valuation is the price per earnings over their expected growth. You want it to be lower than 1, not negative, but you want it to be 1 is right on. You want it to be lower than 1. 1 point something is okay. 2 is okay depending on the sector, but the lower the better you want this ratio to be, and it's considered a different way, a good way to get the value on it. GameStop, I have bought GameStop each time after earnings when it would drop off. I would buy more shares. So I've averaged. I'd have to look at the kids. I don't have the spreadsheet up with the kids. I want to say it's averaged around 22 is where I'm averaging at about for GameStop. But every time it drops, I get it. Book value per share is about 22 on them. So I like that as a safety net for GameStop. But so your PEG is a good ratio. I'm lazy. I usually just do the price to earnings instead of looking at the PEG ratio, even though it's literally the line below. But whenever I talk about stocks here, I usually just do the price to earnings. Okay, because PEG, you start to put into consideration their forward growth, and different things can happen on that. So it's price to earnings is the lazier, easier one to do. We'll put it to you that way. Last bit on Nike, decent amount of cash, pay a dividend. Not too expensive. So lots of things to like about Nike. One of the things that they've got going for them is getting into technology. So I think that's going to take a longer term to pay off for them. So that's what we like about Nike. Foot Locker, yes, PEG is it is kind of a weird ratio, but talk about the next one, Foot Locker here. Foot Locker is one of the retail stocks that is beaten down, and it is beaten down bad. A lot of retail one of the problems with mall business is it is a real thing with like Macy's and Sears really struggling is those stores used to pull a lot of foot traffic. So you're going to see an impact on these other stores, and you know, people don't take that into consideration a lot, the amount of foot traffic they would drive. Now, people are going to continue to go shopping in the future. People like to go out and shop, browse, go to malls, things like that. You know, mall's going to die. Mall's going to, you know, people are beating that drum. What I think is going to happen, and this is my opinion on with what's going to happen to retail, is your retail is going to shrink. Your storefronts are going to be smaller, very niche markets that are out there. Something like a Foot Locker, where they specialize in shoes. You know, you're going to want to go try on shoes, look at the different shoes, stuff like that. They have a very small footprint on a lot of their stores, comparable to, you know, other places, and very good business. They're down today, and they follow along the lines of GameStop too. Very specific, small footprint, generate a lot of cash with not heavy traffic, to be honest with you. Foot Locker, PEG ratio of 1.4, 9 times forward earnings, almost 10. They had the heftier dividend of 2%, and they got $1 billion in cash, not a lot of debt. So really liking Foot Locker on their valuation, and I love the fact that as retail is getting beat up on, and beat up on bad, I mean, they continue to slide, even though they've put up good numbers. You know, they're unchanged over the last year, so they're certainly lagging the S&P. I think it's overdone that you beat up a Foot Locker because people aren't going to Sears, JCPenney's, Macy's. I think Foot Locker has the model for a retail that will survive. That's what we like about Foot Locker. Last one that was on the list, I took off on the list Destination XL and Under Armour. They didn't quite make the grade. Children's Place. People have kids. They need cheap clothing. We really like Children's Place with the rewards that they have, and it's cheap kids clothing. They're down today, and we look at them. Look at 13 times earnings, 1.8 on the PEG, dividend about 1%. So they've got the lowest dividend, relatively cheap. They got an okay amount of cash, small, obviously, as compared to a giant like Nike. So those are who we narrowed it down to, and I am going to go with Foot Locker out of these to add to my speculative list, or shopping list, as some people like to call it. So I'm going to add this today to our spec stocks, the ones that we're going to look at. Let me pull this up and blow it up so you can see it here. All of the stocks that we call on the show, we put that as a buy. As you can see, GameStop's actually slipped a bit. So it was about, it doesn't show you on this chart here. This is just, I track this on Google. But you can see GameStop, I put in the prices every time I say buy, and it slipped 1.58% there. It's usually been up. So it's dipped down again today, so it's probably a good time to buy. Apple's up 35% since we said buy. Nintendo's up 56%. Activision's 65%. Doing very well. Seagate's down a bit. Overall, from when I've said to buy on the show, it's about 12% now. I own all of these stocks for my kids, but sometimes I'll say something's a buy, but I only buy once a month for the kids portfolio. Um, so it may end up on there, but mostly I put them over on our speculate list here. Um, this is my shopping list of ones to buy, and I'm going to add Foot Locker today to the list. The speculate ones have done all right. Um, Nvidia's up 35% since we're looking at that. Tencent, we like Tencent. They keep going up. Capcom, kind of missed that. McDonald's and Texas Roadhouse. We added both from our food picks. They've done well. Uh, I don't know if it came down to McDonald's or Foot Locker. I'm not sure who I would buy. Uh, let's see here. So we'll add that. Viewer picks are doing good too. I'll pull that up real quick. Viewer picks. Regeneron's killing it. AMD's back up. Goose is killing it. So Marty, you've had a lot of good ones there. Max is asking infrastructure. We've done a video on the infrastructure before. I think any company that has a ton of cash, if the infrastructure thing goes through, they're going to benefit. One of the things it was when they first started about the talked about the infrastructure stuff, and I cannot think of the lady's name. Yeah, U.S. Steel might be a good one too. They've been beaten down. And I cannot think of her name. It's one of Trump's secretaries. She's the one that's heading the infrastructure stuff. She had talked about getting the private companies involved. I think it would probably make sense as a way to pull some of the money from overseas over here and get the companies investing into it. So any company that has a ton of cash, yeah, it's that lady. Any company that has a ton of cash, they need to do something with it, and they've got this stockpile. And if they can figure out a way to get their money back from building up the U.S. infrastructure, and this is the dumbest kind of analogy that I can give, but it's kind of the easiest one to explain it, because they're going to do stuff with like internet and things like that. But imagine if Apple, they've got their billions in cash. They built a road or a bridge and they put a toll on it, and they, got whatever toll for the bridge. This isn't what's going to happen, but it's kind of the simplest way to say it. Yeah, Apple's gonna spend all that money, and they're gonna have a million bridges everywhere and collect those tolls forevermore on those. So, kind of silly, stupid analogy that isn't going to work, but it's kind of the cleanest way to explain how they could monetize the infrastructure. So anyone that's sitting on that big cash, Apple, Microsoft is another one. I had the list. You have to look in the videos. I'll find it. I'll put it in the description. Which video I did. I kind of went over the list of the top companies that have the most money that's sitting out there. I think any one of those would be a good infrastructure play. That's just my thought. They got to put the money to work somehow. We've got a lot of companies that haven't put this money to work, and that's where I think the economy is going to be in good shape, because you've got companies literally sitting on billions that they need something to do with it to make money. I mean, I think Berkshire, they've got millions and millions that they weren't. But yeah, those wouldn't be bad either. Caterpillars, Home Depots, lots of great ways to play it. That's the way to do it. I think those stocks are going to be definitely ways to go. Pull up the chat here. Yeah, Caterpillar's a good one, definitely. So I think there's a lot of opportunity. The market is reaching new highs. We did a video recently, if the stock market crashes, um, I mean, yeah, eventually it'll have a recorrection and just buy more. You know, great opportunity to buy. I think we're getting to the point of uh, you've got a lot of good picks and a lot of good things that could be coming up here real soon. So that's it though for today. I think I'm going to wrap it up. And yeah, Max, I think some of those would make some good future segments. But I'm going to wrap up the show for today. Like I said earlier, with some of the housekeepings. Next week, I'm not going to be live during the week, but I will be posting the newbie videos for people to get started in investing. I hope those turn out to be beneficial for people. But following week, I'll be right back at it live with all new segments and things. But really appreciate it, you guys that watching me, every day, every other day and stuff. Very much appreciated. All the videos that I post during the day, all the comments and stuff that I get on that, really appreciate it. But thanks again for watching, everyone. Thanks for the comments, and we will see you tomorrow.